This is a tour of the new Donor Advised Fund report. I'm going to take you through how to find it, how to get to it, take you through some of the key features of it, and then we can talk at the end about some of the enhancement ideas we have in mind for this report. The way you get to the Donor Advised Fund report is through the scenario analysis screen. And let me show you how I'm doing that. I'm setting this up as someone who's got a big $400,000 short-term capital gain. I don't know if you can see that. And that's a good example of when we would use a donor advised fund. So on Schedule A here, let's enter a big old charity amount. Looks like I already did it. So I entered $100,000 of charity. We're trying to offset that big income event. And then when you enter an amount in charity, this purple button will show up. It says New Donor Advised Fund Explainer. So let's take a look at that explainer. This is what the explainer looks like. It starts with this diagram. Pretty standard diagram. If you do a Google image search on Donor Advised Fund, you'll see something like this. It shows the client, if you give money today, you get an immediate tax deduction for it, and then you have the option to distribute those funds to charity in future years. There's some other information in here about the logistics of how a donor advised fund works, some of the benefits. For example, if you've got something like an appreciated security that's maybe difficult to give to a certain type of charity, typically a donor advised fund might be better placed to take that appreciated security than a run-of-the-mill like a local charity, for example. So that's all in there. In this case, remember, we set it up such that we're using a donor advised fund to offset an income event this year. And so what the report shows at the bottom is what is the estimated tax with and without that big lump of charity we did, so that $100,000. So here you can see the difference in total deduction and then the difference in total tax. That allows us to show the client what's the benefit of giving this lump to charity versus not. And I'll just say, like, you can actually tailor it. So let's say it's the business sale. Let's say a business sale is what it was that created that income event. I typed in the business sale, and you can see we expect income taxes to be higher this year due to the business. So you're able to customize what that language there says. So that is the first application of a donor advised fund. There's two more we're going to look at that this report can handle. The second usage of a donor advised fund is the case where, let's say that your itemized deductions are normally lower than the standard deduction, but if you were able to group charity for multiple years into one, you would be able to itemize 1 year. In this case, let's say that we're giving typically $10,000 to charity annually, and let's say our other itemized deductions are $10,000. Yeah, that's like our state and local tax. So that's a total of $20,000 of itemized deductions, which is lower than the standard for a married couple. And so, but let's say that we were able to group, here it defaults to 4, let's say 5 years of charity into 1 year, group them all together using a donor advised fund. Now we can show on the report, this is what would happen, right? We show that in year 1, we're able to take that big itemized deduction. Then in the later years, we take the standard just like normal. And then the difference in deductions we're able to take, the difference in deductions, not in tax, the difference in deductions we're able to take over those 5 years is $34,000. This is something we as advisors, I think, get intuitively, but I think clients, it helps them when they see it broken out like this, they're able to see, okay, now I get it. Now I get there's actually more deduction coming my way. And you'll notice that this report does not adjust the standard deduction for inflation or anything like that. We made the choice that that's just another complicating factor. This is very simple to understand, and it says at the bottom, the table does not adjust future deduction years for inflation. So that's the deal. That's the case where your total itemized deductions are normally lower than the standard. But what about the opposite case? What about the case where I'm giving $30,000 to charity annually? So every year I'm taking the itemized deduction. I kind of waste, I don't get the benefit of the standard deduction. That's the third case that we can show on this same report. So I will flip it to standard deduction never gets used. So in that case, let's say that I give, what did I say, $30,000 to charity. My other itemized deductions, like my SALT, my state and local tax deduction, and we'll keep it at 5 years. And so if I collapse that, what we're going to see here is normally the base case is I'm just taking that itemized deduction of $40,000 every year, $30,000 of charity plus $10,000 of state and local tax, $40,000 a year annually. The alternative is let's bring all of that charity into 1 year. So in this case, $30,000 times 5 plus the $10,000, $160,000. Then I'm taking the standard deduction in all those other years, and here's the difference over the course of those 5 years. $63,600 difference in the amount of deduction I'm able to take by utilizing the donor advised fund. So there you have it. We have 3 different applications of the donor advised fund, and the report can adjust itself based on which one specifically you're trying to present to the client. What I could see changing in the future is specifically these last 2 cases where we were looking at the standard deductions never getting used because I'm giving more than the standard deduction to charity, or I'm giving less than the standard deduction to charity, so I never get to itemize. There's really no reason why those demonstrations have to come out of scenario analysis. Like, there's nothing from scenario analysis that gets brought into these 2 flavors of the report. The first one there was when we were comparing, this is your taxes with the donor advised fund, this is your taxes without a donor advised fund for this year. That tied back to scenario analysis. These 2 don't, and so it does bother me a little bit that we can't just get straight into this without first setting up a scenario analysis scenario. So that's something I'd like to change. We've had some other suggestions about maybe changing up the wording or giving some boxes to show that someone is giving an appreciated security rather than cash to the donor advised fund, and then bringing in some of the limitations around AGI. You'll notice that this example here, I don't make any attempt to tell if I can in fact deduct $150,000 of charity this year. It could be I have an AGI limitation preventing me from doing that. So there's still some things we can do, especially for those last 2 cases, but the first case definitely ties into scenario analysis. So that is the donor advised fund report. I think it's going to be really helpful for explaining a really powerful tool to clients in a way that may shed some light on this strategy that they may not have fully understood before. It is kind of a hard conversation sometimes because you're asking the client to set up a whole new account for this purpose, but I feel like this report really allows us to really explain to the client why we're doing it, what are the numbers in their favor, all in one kind of clean 1-pager type report. I hope you like it. It's the Donor Advised Fund report.